which is lower right now, is UPL. Reported its numbers. The revenues are a mild miss as against street expectations, 16,500 odd crores. The street was working with a number above 17,000 crores. But the bigger miss has come in on the EBITDA, 3,015 crores versus expectations of 3,840 crores. And this is despite or adjusting for the forex element as well. Margins at 18.2%. This compares with the street estimate of 22.5%. And the biggest reason for the EBITDA to decline is basically the cost of materials. They have increased by 23% year on year as against the revenue, which has grown by about 4%. So which means there has been a near 900 basis points decline in the gross margins of the company. The FY23 revenue growth has come in at 16% versus a guided band of 12 to 15%. So that was pretty much in line, slightly better than expectations. But this time around, the margins have been a big miss. The net profit coming in at 792 crores versus a poll of 1,800 crores. So the stock has recovered from the lows. So we'll try and understand, what more the management has on offer for the street to disregard these margins as a bit of a miss. Because from the reported end of things, you're seeing a sharp decline in the margins, and that has led to a big miss on the net profit too.
That's absolutely right. So the miss has come in on the margin front in Q4, and that's the reason why the company has missed its FY23 margin guidance as well. FY23 EBITDA has gone up by 10% versus management's guidance of 15 to 18%. Another important focal point for UPL is always the debt reduction. The company in the last conference call had guided for a reduction in debt. As of Q3, their net debt stood at $3.3 billion, and the company had said that they plan to bring down their net debt to $2 billion, which means a sharp reduction seen on a quarter-on-quarter basis. So we're going to wait by to see if that has transpired. So
there has been some commentary coming in from the company with regards to their debt. They've said that this year they have reduced their gross debt by about $600 million and net debt by about $440 million, driven by improved cash flow from operations and a leaner working capital cycle. So improvement in their balance sheet is something that perhaps the street likes. And also, going forward, they've said that as we look ahead in FY24, we are well positioned to deal with the market headwinds and deliver better profitability growth. In the longer term, they are confident of achieving their growth ambitions. If you just take a look at, the business for the company, regional performance, Latin America grew by about 12%, Europe grew by 7%, North America, which was expected to underperform, fell by about 14%, India and rest of the world growing anywhere between 15 and 6%. That resulted in the overall revenue growth of 4%.
Okay, that's UPL for you.